Currently, the National Social Security Fund is the biggest player in the social securities market, and its conservative investment mix, currently focused on fixed income and assets, has however come under scrutiny for denying the savers a better deal on their contribution.
NSSF invests mostly in fixed income. Fixed income, these are deposits on bank accounts, like fixed deposits in banks, and also government treasury bills and bonds. And the return usually on these are very small, because when you factor into the inflation, okay, and then the way they are invested, it's not aggressive enough in order to provide or to return, to make a good return on that investment.
According to experts, this investment strategy requires urgent revision, considering the industry is still struggling to encourage more people to save through the social security sector.
When you average the return, the real return on investment, real return meaning minus inflation, over the last 10 years, the return on investment on NSSF, as I said, averages zero. So what we need to do, and which is also we're trying to do in the reform process, is to increase, first of all, the governance issues, and also to increase the competition in the way these funds are actually invested, in order to diversify portfolio, the investment portfolio, but while at the same time addressing the issues of risk.
The Uganda Retirement Benefits Regulatory Authority is now pushing for reforms in the sector to benefit savers and the economy through ensuring a better flow of funds from the pension sector into the financial sector. Given the long-term nature of pension savings, the pension sector is always a major source of long-term funding for economies.
All the custody of all those schemes, whether they are foreign or the people are foreign, they are going to be in Ugandan banks. In other words, there is no capital that is going to leave beyond Uganda or beyond East Africa without the approval of the authority. In fact, it's going to be within the banks.
With a portfolio in the excess of 3 trillion shillings, pension funds, besides supporting long-term private investments, can, according to experts, even wean the country off the yoke of donor dependency in the development of social infrastructure projects like roads.